Hello and welcome to Fitch's Structured Finance in Focus podcast. My name's Ben McCarthy. I'm the head of the analytical team for Fitch Ratings for Asia Pacific Structured Finance. Today I'm joined by Tracy Wan. Tracy heads up our team covering structured finance in Asia outside of Australia. So welcome, Tracy. Thanks for joining us.
Pleasure to be here.
We're talking to you today on the eve of the ABS Asia conference in Hong Kong in late March 2026. We thought we would cover some of the things we expect to be the matters for discussion at the conference. I think it's fair to say there's a lot going on in the world right now and a lot going on in Asia. So today we're going to cover the impact of the Middle East war on structured finance, just general performance of transactions in this part of the world. We will briefly touch on maybe some of the issues around fraud and double pledging in securitization. And then lastly, we're going to cover a little bit on digital finance data centers because everybody likes to hear about that. So we might just kick off. Tracy, maybe we can start off with the Middle East exposure and the impact of the Middle East war on Asian structured finance.
Sure. For most of the transactions in Asia, we rated consumer assets, so they are not directly impacted by the war. We do have a couple transactions, one ABCP, one project finance sale transaction. They have mature exposure.
Maybe we could just talk about the infrastructure CLO, right? That's generally a big topic at this conference because there are a number of issuers over the last few years that have been issuing infrastructure CLOs, and they do have Middle East exposure. How does Fitch view that?
So at this point, we rely on the inputs from our project finance team to give us the feedback. At this point, they haven't changed their view on the underlying credits in terms of credit quality. All of the assets are still performing, operating, generating cash as expected. So our view on this transaction hasn't changed.
Okay. And general, is the war impacting things? Obviously, it's very new to us, right? It's only been going a few weeks, so the impact may not be in yet, but obviously petrol prices going up everywhere.
Yep, that's right. So we already done some analysis for all the sectors we cover at this point. I think higher price certainly have a more impact on some India auto transaction we rated because the oil price is a big component for the operating cost. But we think the impact is not near term, given that the government has some sort of measures to cushion the impact, and also the operator has the ability to pass the increasing cost to the end users. That one, we think that the rating itself is still relatively robust. On top of that, there are some economy, including Korea, whose economy is more vulnerable to higher oil price. But the credit card transaction we cover, they have really sufficient credit enhancement despite the potential impact on the economy. Compared to Korea, I think Japan and China are in better position in terms of oil price impact. And the relatively minor impact from the overall economy as well as the unemployment rate, we don't think they will have material impact on the overall performance and much less on the rating side, given the credit enhancement we're talking about.
And I should add, for Australia, the performance in Australia, generally we've been seeing both in autos and RMBS, the arrears levels rising marginally, and that's been happening since the best circumstances of COVID, where arrears levels were at all-time lows. So we're starting to see those things rise. We're seeing, if the theme of our podcast is there's a lot going on, well, the change in interest rates and cost of living in Australia and inflation has been significant in the last few months. So inflation has been running high, and that's only going to be exacerbated by more recent petrol price rises. So Australia's seen 2 interest rate rises in the last 2 months, and we're expecting more. So the higher costs we're expecting those to weigh on performance of transactions, but only to affect sort of arrears levels. We're not expecting it to result in defaults or losses in any significant way. Probably the most significant impact will be actually property prices, which have been sort of, as most would know, perpetually rising, and the increased costs of money, just interest rates, are likely to temper the property prices into the future. We might just move on to the incidence of fraud and double pledging that we've seen in securitizations around the world, and it has been sort of, I'd say, it's not common, but there's been some high-profile cases. Maybe you can just detail what Fitch thinks.
Yeah, I think that the most common, also for most of the transaction brought up, are either Tricolor in the US and MF's transaction in the UK. Fitch rated neither of the transaction. The problem with those transactions, from my understanding, the issuer or the originator double pledged the assets. So the same assets can be in multiple transactions. The question here is that purely from the rating perspective, those are fraud cases that we don't read to, but that also highlighted the problems in the process that, whether the due diligence has been or can be done thoroughly by third parties, or if there's anything like in the process that can be improved, that such of issue can be detected in the future. So there are some discussions that, if auditor can do a consolidated view to look at the entire originator's balance sheet to understand whether those assets can be possibly double pledged. So that's still something ongoing. But I think from our perspective, if the transaction or originator see, rapid growth of the portfolio, and there's also something raise more questions for us to look more closely to see whether that's potential fraud outstanding or can be an issue there.
No, I'd agree. I think there's a genuine concern that frauds like this can happen in very public assets. And I think with AI, the way it is, the ability to produce fake documents and do things may have been more difficult in the past. I think that is something that, we're looking more into. It does make us think more about, or all parties more about due diligence, how certain they can be. I think that's true. And, something that we'll be obviously talking about a lot at the conference.
Another sort of a topic that is hot these days are data center. So we haven't seen a public transaction in APAC yet, although globally, particularly in the US, they have number of transactions Fitch rated. So maybe, Ben, can you share some of the sort of recent trend we have seen in the space? Australia probably is the most likely place that we're going to see a public deal, but generally, what do you see in this sector?
Yeah, I guess important to note that the way Fitch gets data center financing into organization or into ratings can come through our corporate group of rating at the holdco level, the project finance people rating from construction right through to mature assets, and then ABS and CMBS. So with all the investment going into that sector, a lot of it is in construction. So project finance group is seeing a lot more of it than structured finance is. But that will generally flow through, and just the volumes of money that need to be spent to build and operate the data center sector is going to lead to capital markets execution. There have been some early transactions, so we're seeing both in CMBS and ABS around the world. So Fitch has rated transactions in the US, which is where most of them are, but there's one in Canada, there's one in the UK, one last week in Amsterdam. So they're sort of starting to spread across the world, and I guess that's to note. Data centers will be everywhere, so it makes sense that the transactions will as well. I think there's interesting different sweet spots for the different types of transactions. So CMBS, in our analysis, relies a lot more on the real estate. It's backed by a commercial mortgage. ABS is backed much more by the cash flows, so much longer tenor. And there's too much detail for this podcast, but I would recommend that people who are listening to look at Fitch's website. So fitchratings.com, there's a digital finance page where you can see all the different digital finance, and that includes, fiber transactions and GPU transactions. So, lots of anything in the digital ecosystem. There is a lot happening, and it's evolving over time. So I think that's something that people should watch. Thanks, Tracy, and thanks everyone for joining us. For more information on any of the topics we've covered, please look at our website, fitchratings.com, or contact either Tracy or myself. Thanks for joining us.